Good morning, good afternoon, and good evening. It's October 12th, Thursday, 6:33 p.m. And
Hello, everyone.
we're finally recording, back to recording again. How are you, Wawi?
I'm doing good. Hello to all Filipino Americans. It's Filipino American History Month.
Oh, nice. This October.
It's October.
Wow, very good, very good. It's been I checked our recordings and it's been 62 days and 22 hours since our last episode. So, for those who are tuning in, welcome to our latest episode, episode 85. Take off.
85. hmm It's been a
Interestingly,
while.
interestingly, for the past 2 months, the last episode was titled Losing Altitude. So, right
Well,
now,
now we're taking off.
are we taking off? So me and Wawi, we're just so for disclosure, we're not registered financial planners. We're working in healthcare, and we just share our interests in investing our hard-earned money in the stock market. So we try to record at least once a week, but there have been major life changes recently. So we're gonna talk about it maybe later on, but now we're slowly going back to our routine, I guess.
Mhm.
All right. So usually we take a look at the sentiments of the investors in the US. So the AAII provides a weekly sentiment survey. So fresh from the oven, this was published yesterday, October 11. Uh, Investors, if you take a closer look, have slowly turned more bullish in the past 3 weeks. We are now at the highest, 40% since September 27.
Oh,
Um,
wow.
yeah, meanwhile, the bearish investors have quite dampened down a little bit from 40.9 down to 36.5. In historic perspective, would you believe that? We actually have registered the highest weekly bullish sentiment compared to its highest compared to the historical average of 37.5. At the same time, we are still hovering higher than historical average in terms of bearish perspective at 36.5 compared to 31. So still a little bit what do you
Like
call
a
it?
tug of war
Tug of
between the
war.
two
Exactly.
forces.
Exactly. Yes. It's not like overall bullish, it's not overall bearish, but a little bit more bullish at this point in time. And if we're gonna take a look at I think it's better to check on the sentiment gauge provided by CNN. So for the fear and greed, meanwhile, we are still in fear sentiment, 35 points compared to extreme fear, which was 22 points a week ago. And look at that, 1 year ago we were extreme fear, 15 points. So we've come back from a far depressed period about 12 months ago. But yeah, still we have trended down to fear compared to the past month. So a month ago we were at neutral. So we actually dove down quite a bit. So October 2nd looks like the bottom in terms of the sentiment gauge. It was far worse than where we were back in March of this year when there was a sell-off during the bankruptcy of several banks.
Mhm. And then
So
we have the Russian-Ukraine invasion. So that's another downtrend at one point.
yes,
It
and
looked like
mhm,
people that are investing are more optimistic
yeah,
of
we're
the current
bouncing back.
situation.
Yeah, true. And yeah, speaking of the recent bombings, there was another bombings in Israel over the weekend, and the market has not really paid much attention as we're gonna take a closer look on the S&P 500 performance. Besides that, we have actually recovered. So in terms of the market momentum that we also follow closely, The 125-day moving average was broken, pierced through back in September 22nd, when everybody was feeling, you know, bearish at that point. And we actually dipped quite a good amount until we reached the bottom on October 3 and then bounced back up. And we actually pierced back to the positive side of the 125-day moving average on the 9th. And then we kind of are now hovering just barely above it, or if not right there at the 125-day point. Amazing. It's just right there. So tomorrow might be interesting because I actually heard over the business radio that NASDAQ is actually close to its death cross. What do you call it? Death cross chart.
Yeah, I
So
saw your posting that it had more days of losses than days of gains for the year.
true. So if you're going to take a look at the definition of death cross, it's a market chart pattern reflecting recent price weakness. Refers to the drop of a short-term average below a long-term moving average. In layman's terms, if it crosses that death cross, it's not a good sign for bullish investors or for those who think that the market would be able to recover pretty strongly. So it's a bearish sign, in fact. So tomorrow is a crucial day. What is tomorrow? Is tomorrow Friday, right? October
It's
13th?
the 13th.
Friday the 13th.
I think that's why they're saying that.
So as well as it's going to be a busy day for banks. Earnings season starts
Oh
officially
yeah, the
tomorrow.
big banks.
Big banks are going to come out with their report. So if they fail meet expectations, that might pull the overall index down, which we are now right there at the market momentum 125-day moving average. So it's crucial day tomorrow for sure, right, Wowie?
Yeah, it will be crucial, but the banks have been showing some resiliency through the months,
Mm-hmm.
uh, and including the time that the regional banks were crashing. The larger banks are actually doing okay.
Right.
So I'm
Well,
expecting some good report from J.P. Morgan and the like. But again, we really don't know for sure what's gonna come out tomorrow. But I
mm,
am just basing it on what I am seeing uh, on the reports. That all these banks are expanding their businesses globally. So there might be some capital expenditures there, but I'm seeing that they're gonna be stronger than ever if
right.
they out of this.
Well, I think for some reason JP Morgan's Jamie Dimon, the CEO, has been a little bit less loud recently. He's still on the news wires, but he's not forecasting any severe weather like
Like
hurricane,
he was doing before.
storm clouds looming. No, yeah. There's no quote like that, negative sign. So I think JP Morgan would probably deliver fair, if not good results. But one thing that we need to watch out for is another big bank, Bank of America. Because as
Mhm.
of the recent quarter, the previous one, the second quarter, they've reported around 100 billion in paper losses with their treasuries because of the ever increasing higher rates. So, and we also just recently, as of last week, read reports that we have reached the highest rates since 2007. So, if anything, Bank of America might be registering even more or larger paper losses by tomorrow, but we'll see how that goes.
Mhm.
The put and call ratio also has recovered. A lot less put a lot less put buying, or meaning protecting your portfolio by buying put options, meaning people are getting less protective of their portfolio, but still it's still quite high. We are still in the fear range in terms of the put call ratio compared to July when the market actually was reaching its peak. so far this year. So people still a little bit more defensive, but not as much. And the volatility, the VIX index. So actually volatility is still higher than its 50-day moving average, quite touching it almost yesterday, but it still looks like it's ready to bounce from the average. So it's one thing to watch out for. Yeah, so for those who are not familiar, if the volatility goes up, the market usually goes down. So right now, in my opinion, looks like it's ready to bounce again for the Friday the 13th. So that's
Mhm.
one thing to keep an eye on.
Which
And
is unusual. Usually Fridays and Mondays historically have been down days most of the time. But I
true.
think right now
Yeah,
it's different.
yeah, yeah. Especially the earning season coming up. Oh,
Mhm.
speaking of earnings, listeners, you are in for a treat. We have FactSet earnings insights pulled up in one of our slides. So you're gonna see um,
Nice.
what they're gonna, yeah, forecasting in the coming days or coming weeks at least. Busy earning season again. So for the past week, taking a look at some sectors, best performing sector obviously is energy because of the bombings there in Middle East. So a lot
Mhm.
of Arabian countries trying to stand with the offensive side, which was Palestinians. Overall, it's the terrorist group Hamas that you know, and then one of the reasons is speculation of Iran's involvement, but Secretary of State Blinken actually stated that there's been no finding that Iran directed the terrorist group to attack Israel. So I guess that had kind of like smoothened things down on the oil side. It actually dropped quite a bit after this upsurge on Monday. But still,
Mhm.
energy is still up. I think it's mostly because now of the big takeover of Exxon of Pioneer, right?
Yes. Mhm. It's a large takeover.
$60 billion. Yeah, $60 billion to acquire Pioneer. And that would, like what we have talked about in the group, Exxon would be even surpassing some of the OPEC members in terms of oil barrel produced per day. It would be averaging around 1.3 to 1.5 million barrels per day. Followed by energy is followed by utilities and then technology. Technology is still hanging around, which is interesting. And the worst performing sectors are healthcare and consumer defensive. I got a question here, Maui. Have you noticed Novo Nordisk and Eli Lilly, those two drug companies?
No, I haven't been looking at that. What happened? I
So
noticed Dollar General going up, but
the Dollar General is bouncing today. I think it just reported some earnings. But yeah, Novo Nordisk actually is
yeah.
one heck of a stock this year. It's up 46%. It's
Ozempic.
yeah, because of the Ozempic. So for the past 12 months, it's actually almost doubled 91% because of the Ozempic, the medication that helps people lose weight. And as a
Yeah.
result, it addresses a lot of sickness too.
And
And
now Walmart is saying that their grocery sales are down because
yeah,
of that.
yeah. Doug McMillan, CEO of Walmart, coming out saying that these medications have lowered down the appetite of some of their consumers, or mainly a lot of their patrons. But also Eli Lilly has its own drug. I'm trying to remember. Is it Monjaro? I think it's Monjaro.
Sounds like it. Yeah.
Yeah, I
Mhm.
think it's Yeah, Eli Lilly, Monjaro, tirzepatide injection. So it kind of acts as the same as what Novo Nordisk has made Ozempic. But yeah, Eli Lilly year to date is up 67%, and it's up 83% for the past year. These are the two major winners, but I'm wondering why healthcare is way down there. Maybe healthcare is covered mostly with insurances, not drug companies. Oh,
Yeah.
besides,
Yeah.
I think I think Novo Nordisk is not even U.S. company.
Yeah. Yeah. I don't think so either. But there's a lot of tailwind for those type of diabetes medication, especially after finding out that Ozempic is protective of the kidney as well.
True,
So
yeah. Yeah, that report came out yesterday or this morning, right?
yeah, probably yeah within the last 24 hours.
Yeah, and it sank Davita stock down quite a bit, I remember. I think it's down more than 13% yesterday and still down today by 3%. Yeah, it has effective Davita. Yeah, Davita stock sell-off over Ozempic study. Yep.
I always remember Warren Buffett saying that, the factor for health really is, looking at the big picture is the weight.
Yeah,
So now we have a drug that addresses the weight issue.
totally. Yeah. So it may not be too late. I don't know. I might get some Novo Nordisk just to be on defensive side. But for the past 3 months, though, we only have two sectors that are positive: oil or energy and communication services. The rest are down in the toilet. Utilities the worst performer, 13%. Probably because of the high interest rates and a lot of debt covered by utilities and real estate.
Hmm.
And since the start of the year, best performing sector, the bounce from last year is technology, up 35%. And the worst performing sector, utilities, down 16%. So we're gonna breeze through with the weekly performance. S&P 500 is up 2.7 for the past 5 days. Volatility, it's down 14% for the past 5 days. Nasdaq is up 3.4% for the past 5 days. And volatility for Nasdaq is down 12%. So for the fund flows, we always take a look at the Reuters publication, which is very reliable. They come out with this report every week. So this was published just 2 days ago. They said global bonds see record inflows so far. BlackRock. So let me see. Well, this is just a BlackRock highlight. I would rather go for like their usual report. Sustainable global funds. It says here renewable funds. Oh, here we go. All right. This was published October 6th by Reuters. Global bond funds. So BlackRock is saying that they just record the largest weekly inflow, but overall, globally, there was a massive outflow, according to Reuters.
Hmm.
If we're not careful, we can easily get deceived by some reports by some firms. Well, BlackRock is one of the largest, but we want to see the broader, like the global flows. Where's the money
The
actually?
macro.
Yeah, the macro. So job openings unexpectedly increase. That could compel Federal Reserve to raise interest. That's why a lot of investors withdrew a lot of money, 8.47 billion from global bonds. Biggest net selling since December 12 of 2022. A lot of money got scared there because of the strong jobs report last Friday. So
Hmm.
a lot of money came up the
And
bond.
they're not even buying treasuries right now.
Uh-huh.
So
Yeah.
they're kind of holding back on buying treasuries.
Yep, they've been selling 10-year treasury, a lot of selling there. US and European bonds registered outflows, 6 billion and 4 billion respectively. All right.
And that probably showed the net inflow into equities for that short term this week. Um, it's just like it will reverse every now and then. It will reverse depending on what the Fed is saying and what the world is doing.
Right. Yeah, it's true. It just depends on the security and safety of their investments, whichever they perceive
Yeah,
the better option.
yeah, the
So,
global risk for one.
and it says here, notably, riskier global high yield funds experienced 3.17 billion outflows. following 3 billion the previous week. All right, so let's see the sectors now for the stock market. Investors channeled investments into government bond funds, which attracted 1 billion. Money markets lured a massive 45.5 billion. So
That's where it's going.
people still dumping into money markets. And let's see the sectors. Healthcare, consumer staples, consumer discretionary, continue to see withdrawals. 794 million, 642 million, and 507 million. So these are the poorest, these are the sectors that are failing us this year.
Hmm.
So investors continue to sell out of them last week. Commodities, meanwhile, still selling straight in commodities, 11th week in a row, with a net
Hmm.
withdrawal of 800 million. That included 78 million from energy. Well, believe it or not, yeah, people are selling energy. So some of them weren't able to ride the bounce of energy recently. Precious metals, outflow of 400 million. So for the emerging market, they also experienced outflows from their bonds, 1.7 billion. 10th consecutive week of selling. Also, investors sold 1.28 billion in equity. So a lot of money coming out of the market,
Hmm.
despite the
A lot of
recent return.
uncertainty and risk seen in the market. But for me, it just offers you a lot of opportunity to look for, equities that are of, you know, good value at this point when people are running away from the market.
True. So we're gonna dive into the FactSet earnings insight for this quarter. This was published on the 6th of October. So for the third quarter, FactSet says it is estimated that the S&P 500 will register negative 0.3% decline of earnings. This will mark the fourth straight quarter of year-over-year earnings declines. And that's not a good sign, right? It means that the earnings profits are declining.
Mhm. It's pressured by the high interest in environment right now.
Mhm.
To keep their business going, they have to borrow funds to roll into their businesses. So
Right.
technology is highly affected by this, of course, because they're the growth companies, and
Oh,
they're less established, and they're still working on growing their company. So they're sensitive to this interest rate.
right. And we're gonna see in a little bit which sectors FactSet thinks, aside from technology, we're gonna deliver lower growth. But look at the valuation, Huawei. This is a good sign, I think. The
Yes, yeah,
forward
I
12
saw
month
that.
PE ratio is 17.7.
We haven't seen that in a long time.
Yeah. Well, the average for the 5 years is 18.7.
Mhm.
And yeah, so it's quite a, not a big difference, but 1 point PE ratio difference from the 5 year average. But it's still slightly above the 10-year average of 17.5. So that's an
It's been
interesting
running in
sign.
the 20s before when it
Yeah,
was spiking in the 2020, 2021,
true.
you
We
know,
were at 24 or
uprun.
26. Yeah.
Hmm.
So according to FactSet, the financial sectors will be the focus for the next 2 weeks, as more than 40% of the S&P are scheduled to report. All right, so we have already talked about JP Morgan coming out with their reports tomorrow, Bank of America, American Express. So the financial sectors is predicted to report the fourth highest earnings growth rate of all 11 sectors at 8.7. So we are expecting beats from the financial sectors. So tomorrow, Friday the 13th, we need to buckle up. Um, all
Yeah,
right.
that's gonna pull the market up. That'll be the tide to pull the market up for the near term with
Yes, yes.
results from these large banks.
Yeah. Meanwhile, on the other hand, says capital markets. and consumer finance are predicted to report declines in earnings. So I guess investment banking coverage, brokerage, financial data exchanges. Oh, okay. Sorry. So it's just got capital markets and consumer finance. So I'm not really sure which companies those are, but
The lenders.
the lenders, but they're also the banks, right? The big
Hmm.
banks. I don't know.
Hmm.
Mm, so yeah, insurances are the subsector of financials that are expected to deliver much more growth. I guess
Hmm.
absence of any major catastrophe nature-wise, they're expected to have collected more premiums.
Hmm. Yes, that's true. Property prices are going up,
Hmm.
so they're charging higher premiums now for their customers.
True. And then financial services and then banks. Meanwhile, consumer finance and capital are down. Like these are the M&As, I think.
Hmm.
So probably next
Yeah.
month or next quarter, they'll see a lot of bump because of the 60 billion acquisition from Exxon.
Hmm.
So, okay, here we go. The overview. All right, by the numbers, by FactSet. Third quarter earnings outlook will be less negative to recent quarters, but this will be the fourth quarter. Again, as a reminder, it will be negative, but it will be less negative to the previous ones. Uh, overall, the index is expected to report year-over-year declines. Okay, that's what we've talked about earlier. In terms of guidance, S&P companies issuing negative is equal to the 10-year average. Oh, so it's not that bad, Wowie. It's like a 10-year average, even though it's a little bit negative. At this point in time, 118 companies have issued EPS. Of these 118 companies, 76 have issued negative and 42 have issued positive earnings per share guidance.
I think that's what the analysts are saying, that is more of the normalization period
Mm-hmm.
for equities. Long gone are the you know decade run of low rates and money flows.
Right. But regardless, the percentage of S&P 500's issuing negative guidance is 64%,
Hmm.
which is still above the 5-year of 59%, but just equal to the 10-year average of 64%. So, right, well, I'm thinking maybe we're still there at the average. And like you said, it's normalization. So,
Hmm.
hopefully by next quarter, we'll see a bounce. So 8 of the 11 sectors are still expected to report year-over-year earnings growth, led by communication services, like what you pointed out earlier, the technology sector, and consumer discretionary. On the other hand, 3 sectors are expected to report year-over-year decline, led by energy and materials.
Yes.
So
Hmm.
that's actually good for inflation. Like
Hmm.
Fed wants to see less, they want to see deflation actually. So if
Yes, a
material,
slowdown in manufacturing and production. So that should slow down the GDP.
right.
They're
And
trying to balance,
mhm,
high job rate with low interest. That's what they're trying to do, trying to bring it down to that 2%.
yeah,
Goal.
and they're
But
stick
I think we're very close to that. I think we're very, very close to that.
yeah, and I
Uh,
think they're sticking with the 2% inflation too, not just 4%. So
mhm.
we might see still higher for longer for a little bit, but yeah,
That's
we're
yeah,
mhm,
that's what they're saying. But I, I, well, I think if they just don't do much right now, I think they're gonna really hit a soft landing.
mhm,
Um, but if they challenge the market by increasing the rate, I think the market will react, you know, erratically
mhm.
and cause uh, hopefully just a small crash. But we'll see.
Right, because like what we have seen last week, a lot of smart money or investor money have been by the billions, by the tens of billions, they'll be pulling out the bonds just because of higher
Mhm.
employment numbers. So could freak out a lot of people, investors.
Mhm.
For revenues, S&P 500 is expected to report year-over-year revenue growth of 1.7%. It will mark the 11th consecutive quarter of revenue growth for the index. And that's kind of interesting. 11 consecutive quarter of sales growth, top line growth, while we are registering the fourth consecutive quarter of declining earnings per share.
Mhm.
So expenses are crimping up
Mhm.
in profitability.
Mhm.
It's not just the companies are having a hard time making business. They can make business. In fact, the revenue is still growing despite the
But they still have to service their debts.
service the debt. Yeah. Oh yeah,
And
that's one good point. Yeah.
mhm.
More expenses.
So,
And a lot of right now the trend is a lot of unions are walking out. Like uh,
yeah, so they have to pay their,
uh,
the wages are going up, so salaries are going up, and
yeah,
so it's a lot of
operating
expenses
expenses.
right now, in
Hmm.
spite of the earnings going up.
Yeah, one of what is that Ford plant, the biggest Ford, the most profitable, if the largest Ford plant. I'm not sure where it's at, but they just experienced the UAW workers walking out last night past 6 p.m.
Yeah, what they call a surprise strike.
Mm-hmm.
Yeah, so
So,
the workers are leveraging their union,
mm-hmm.
against these companies, and it's really tougher and tougher for the big three automotive, and when things are, really hard already.
Yeah, Ford stock is actually down. Well, wow, it's up actually 2.74% for the year. I was thinking it would be down more than 20%. The General Motors stock, okay. General Motors has been hit 10% down since the start of the year. But interestingly, Ford is still up despite the massive strike in their union workers.
Yeah, Ford has a good customer base and loyal customer base,
You know,
so it's a strong brand.
Ford F-150,
Hmm.
the best-selling truck in the world.
Yes. Hmm.
So aside from that, so now we're expecting the 11th consecutive quarter of sales growth for the S&P, which is good. So I don't actually see a recession coming up this quarter then, if that's the case. Whereas a lot of
Hmm.
experts are saying it might be this fourth quarter or early next year. So we'll see. 9 sectors are projected to report year-over-year growth, led by, again, consumer discretionary, which is part of the mostly tech sector,
Hmm.
whereas 2 sectors are predicted to report year-over-year decline in sales too, which are energy and materials.
Hmm.
So looking ahead, this is for the next quarter. This is for the fourth quarter now. Experts are expecting 7.8% growth. Wow. I don't know if we
That's
can meet that.
Well, at least it's not a two-digit. They're really optimistic if it's two-digit.
Yeah, because
Yeah, everyone is agreeing that it's just gonna be a single-digit growth for sure.
well, yeah, but come to think of it, now we're in the third quarter. We are on a fourth consecutive negative. So
Hmm.
I think analysts are now thinking, well, since we already have registered negative growth a year ago,
Hmm.
then maybe, we'll bounce in the fourth quarter. If not, that might be a good trampoline for disappointment there and could cause a sell-off just around December time.
Yeah, that's what I'm seeing too. I kind of agree with that scenario. If not December, maybe January, closer to election period,
Yeah,
because historically it goes down during elections, and then it bounces back up afterwards.
yeah,
We'll see.
yeah. And for this calendar year of 2023, analysts are expecting still an earnings growth of 0.9%. And for next year, a stronger year. Wow. Would you believe that? 12.2 for next year.
Well,
Despite,
something has to break. Something
yeah,
has to break. You know, they're still building houses. They're still building housing inventory. Like you said, you know, housing is 16% of the GDP, and it's being pressured right now with the high rates and the high housing prices. So eventually, you know, things will have to break for things to open back up in that sector.
true. Well, we're down to our last 2 minutes, Wally, so we're just gonna breeze through this. We're just gonna highlight some companies. So, for the companies that are probably gonna beat expectations, they're expecting Amazon to take the lead.
Hmm.
Largest percentage increase in earnings growth. For energy, they're looking at Marathon Petroleum and Valero Energy.
Hmm.
For information, wow, Nvidia.
Wow.
Nvidia is
Ugh,
still on the list.
that thing is just unstoppable. I'm telling you.
And then communication services, it's Facebook or Meta Platforms and Alphabet, parent company of Google. For materials, this is the the declining aspect or part of the sector. Dow leads the earnings decrease, so don't
Mhm.
expect too much from Dow.
But
Industrials,
that's probably the first sector that will go up once the rates are reversed.
exactly, yeah, that's a good point right there, Wally. So we need to keep a close eye on these materials and industrials. Boeing is actually a good defense play now that
Yes.
there's increase in tension. Healthcare, Moderna as well is expected to report lower. So I
Mhm.
guess that cut things short of our comeback at this point in time, Huawei. And thank you
It's
for
good to be
joining us.
back.
Yeah, it's good to be back. Good thing we were able to record on Thursday today. Hopefully we get to make it again next week. Again, this is Mark Hughes signing out. Thank you.
And this is Wawi Santos signing out. Good luck to all investors out there. Thank you.